to Money, Money, Money. I'm Sumera Abdi. Well, the year is almost out, and you know what that means? It's the time of the year to make New Year resolutions. So while you vow to get healthier, calmer, fitter, more balanced and whatnot, don't forget to also vow to get money-wise and, more importantly, to actually stay that way. So to help you along in planning your financial resolutions for 2016, joining in is Harshvardhan Roongta of Roongta Securities. And also joining us this week is one of our viewers, Meghna Parekh, who's actually looking to pick Harshvardhan's brains in making her own financial resolutions. So thanks very much to both of you for joining in. But Harsh, let me begin first with what I think is the most pertinent thing when it comes to financial resolutions, because we all talk about investing all the time, but I think it's only fair that one actually begins with protection, right? So if one were to think of insurance, what would be your advice for the next year?
Well, Sumera, actually you've picked up the right point. Now in insurance, you will divide this into two parts. One would be life insurance, wherein you cover your own self in case of an unworthy incident when something happens to you. The individual needs to buy life insurance so the family gets protected. The other element, and one of the most important elements, is a hospital expenses reimbursement, so which is popularly known as Mediclaim, because medical expenses could basically drain out a lot of finances of a family. So life insurance and Mediclaim are the two elements which one should resolve to make sure that he or she has this adequately. When I say adequately, what is important is not just having life insurance, having the right amount of insurance is also very important.
Okay, so no under insurance and no over insurance as well, because it's not going to serve any purpose.
Absolutely.
Okay. Meghna, what are you looking to do in 2016?
I have a loan and I'm looking to invest. So what should be my priority?
This is one of the very important questions which you need to answer. So at one instance, there is an individual who has an outstanding loan to repay. They have some kind of money, so Meghna has some money available with her right now, and now you're looking forward to invest it for your future. Well, this is one situation where we are not able to answer. The reason being, if you're looking to plan, you need to start early. The earlier you start, the better it is. At the same time, you have an outstanding loan on which you're already paying some interest. So ideally, in the Indian context, in the Indian mindset, we would like to repay our loan as fast as possible. So the priority should be to repay the loan first, and at the same time, as and when the loan gets repaid, you start with your investments as soon as possible. Now having said this, you need to keep in mind that you create a balance between the two. If you have an X amount of money, you might not repay the entire amount as the loan amount. You could partly repay the loan and also start cultivating the habit of investing.
And this doesn't change between a good loan or a bad loan. Like if I have a home loan, I'm also getting tax benefits. So maybe I should keep some part of it ongoing.
Absolutely. Now this is when I said you need to try and draw a balance between the two. So if you have a good loan such as a housing loan, in all probability you will not be able to repay the entire amount. So what we look at is...
Don't say that, I'm hopeful of the coming year.
Yeah, but you know, generally if you're buying a property for yourself, it's a lifelong saving that you invest in. So the loans are reasonably large in size. So we're trying to assume a situation wherein there is some part of a loan which you can repay and retain that much, the interest of which qualifies for tax deductions. So at least you can start and reduce your EMI to that extent. The amount of EMI that you reduce, you can start probably investing with that amount.
Yeah, and while you're at it, should you also look at perhaps updating nominations in your investments, or I mean, is that something important enough to figure in the list of resolutions?
Well, Sumera, this is actually one area which you need to make sure that you dedicate enough time towards it. We all know that there is going to be a situation wherein your assets, be it your investments, be it your bank accounts, be it your PPF accounts, your property, will need to be given to the next generation. Will need to be given to somebody else in case something happens to you. Now, how does that transfer take place? If there is an asset or an investment, it needs to be given to somebody after your demise. Now, how does the institution or organization know whom does it need to be given to? So you need to nominate, you need to make sure that you have updated the nominations, you've actually even made a will in that context. So at least the organization knows whom the money needs to be given to in your absence.
Okay, Harsh, you just said that you want to make a will. So in my house, though, I stay in a nuclear family, so I don't think I need to make any will, because it's not that I have any issues or complications in my life. So
well, Meghna, what is important when you make a will? There are two aspects of making a will. The first is that you're clearly defining whom the property or the asset should go to in the event of the demise of the the owner of the property. The second element is there is a process to be followed for transferring of an asset. Now take for instance, you have a residential property. Now residential property, in case of the owner, the name in whom the property belongs to passes away. Who is going to transfer the property in the name of the legal heir? So there has to be a defined format. There has to be a name defined that the property needs to go to an X person. Now this is besides the fact that only information, this is also required from the legal standpoint. If you have a will and then you get it probated in the court, then there is no way anybody else can challenge. Then there are inheritance laws which you need to be careful about, and they can sometimes complicate even a very simple nuclear family.
Yeah, you never know what is in store the next day.
I agree.
But and therefore, shouldn't tax planning also be done at the beginning of the financial year? I know it's going to be one of my resolutions for 2016 because I tend to delay it a little bit, not towards the end of the year, but a little bit. So shouldn't all people now move it to the start of the year?
Absolutely, Sumaira. If you talk about tax planning, the advantage is that when you start planning in advance, you can buy the correct product. Unlike a situation when you reach the last moment, you take what is given to you. So usually we see in corporate employees the deadline that the corporate sets, that you have to submit all your investment proofs by a particular date. You will find people running around and buying something or the other just to meet that deadline. That necessarily may not be in sync with what you should be doing. So the advantage of starting early is only this, that you can also start buying the right product which is actually required for your goals and your life plan.
And also earn interest through that financial year as opposed to just earning towards the end. And in that sense also buy it at the beginning of the month and not middle of the end of the month. Yeah. Alright, let's take a quick break on that note, but we're not done with our financial resolutions yet. We'll continue talking about all of this and lot more, and also give you some more tips on how you can invest better in 2016. Stay tuned. Welcome back. You're with Money, and this week is really fun because we're doing something we all love doing, which is planning for the future. The only difference this time around is that Harshvardhan Roongta is ensuring that 2016 will actually be different by making sure that everything moves smoothly from planning your finances and on to the implementation stage. Also with us is one of our viewers, Meghna Parekh, who's been making her own resolutions for 2016, and I'm sure you have a few more to go.
Yeah.
But before I come to you, I want to ask you actually about the review of someone's portfolio. Now normally this is something that we ignore for years at a time, but given the way how static 2015 has been, would 2016 be a good time for actually someone to take stock of where their portfolio is and where it could be headed?
Well, Sumaira, if we talk about financial planning, it is very closely linked to what is your what stage of life are you in, and what are your circumstances, external circumstances. When we talk about planning, it has been kept in there are certain factors kept in mind. Now what if those underlying factors change? Like if an individual who was single gets married, a couple gets a child, so everything around their finances will change. So hence there needs to be a review of your financial plan. Whatever you decide and you plan does not remain constant all the time. Now there could be a situation where circumstances you believe have not changed, but the investment environment has changed. What you had thought would be a good investment in probably 2013 may not be the case in 2016. So there is a need to review your financial plan regularly, which could be possibly every year, could be once in 2 years, could be once in 5 years. But a review is definitely necessary because everything does not remain as you have planned initially.
Harish, I wanted to ask you that my husband and me were investing in mutual funds. Now the thing is, we are not happy with the returns it's giving us. So you think we should look at something else?
Well, Meghna, when you look at and when you invest in a mutual fund, and particularly through SIPs, through systematic investment plans, there are certain long-term goals that you've kept in mind.
Yes.
You require this money possibly 10, 15 or 20 years from now. In the short term, markets are supposed to be volatile. You would find a particular phase in a market wherein there is absolutely no return at all. You would find one particular phase, it could be just 1 or 2 years in a batch of say possibly 7 or 8 years, that only 1 or 2 years the markets have done exceptionally well.
Right.
And then again they have gone into the flat mode. Now this is the structure of the equity markets. Now you do not know which is going to be that 1 or 2 years where extraordinary returns have come in. You do not know which is going to be the flat period.
Right.
You do not know which is going to be the bear phase. Now because we do not know, the only way to basically move along with the market is to invest regularly. When you invest through SIP, a systematic investment plan, this is exactly what you're doing.
Yes.
So you need to have some conviction and faith in the investment, in the equity markets as a general,
Yeah.
So that they help you create wealth over a period of time. This is one of the common mistake which people make. If in one particular year you will find that markets have been bearish, investors will stop, will stop their SIPs. Well, actually that is the time you need to increase your SIP, because that is the time you need to buy more when the markets are not doing well. So if not buy more, at least continue, is what I will tell you without fail.
Okay, so in that case, do you think people should just earmark a certain portion of their income for their investments, like whatever, say 15, 20, 10%, I mean whatever they may decide?
Well, if you can, you should definitely do that. Now let's take an example. If you're a salaried employed, there is a TDS which is deducted from your salary, and then you get the money in your hand. So tax is already deducted and money comes in the account of the salaried. You manage all your expenses within that somehow. Why don't you create another income tax in that context, or another head wherein another 10 or 15 or 20% gets deducted towards investments, and you manage your expenses from the rest of it. This only helps you ensure that you are not only talking about investing for future, but you're actually going to do this, and you're going to do this out of your income without fail. You prune your expenses to that extent. You start living within those 80% of net take home. So this kind of a habit needs to be formed, whether you like it or you don't like it. Otherwise the future is going to surprise you big time.
I wanted to ask you one thing, Harsh. If supposing I'm investing, if I want to keep about 15-20% for investing, so does that include the money for emergencies or contingencies, or do I have to keep it exclusive?
No. Now when we talk about emergency funds, we talk about investing 15 to 20% of your income. Let's understand this. If you're earning an X amount of money, you need to save 15 to 20%. Now within that 15 to 20%, you need to earmark money for even emergency funds. Because you need to also maintain your expenses. I mean, if you're going to say 15-20% is only for long-term goals, then another 10% or 15% is for emergency funding, then another 10-15% for something else, then you're not going to be left with any money for expenses. So 15-20% is a standard which we say that that's the minimum that you should try and save.
Yeah.
How do you go about investing that 15-20% would depend on several factors. Like, it could be saving for retirement, you could saving for children's education, emergency funds, it could be for insurance. So 15-20% is an aggregate under which all these heads would fall.
You know why we call you back on money so often? Because our viewers love you. He never relegates expenses to this evil thing that you must not do. He always
encourages.
Not he encourage, but yeah, he's realistic enough about the fact that there are expenses which people have. Okay, so then one final thing which I think would be on my list as well for 2016, which is that I'm looking to digitize my records. Is that important enough for other people also to look at?
Well,
and
Sumedha,
how does one do it?
Sumedha, let me ask you this question. If you were living in Chennai, and we've seen the floods that, the devastation that took place in Chennai, the houses were submerged in water. What if your passport was in that cupboard that you had in that house which was submerged? What about the property documents? Now they would have all been destroyed. Well, the least you could do is that at least scan them and have it on a server, on cloud, or have it in your email account. So you can at least retrieve the data and apply for recreation of those documents. Like if you are going to apply for a duplicate passport, in all respects you might not remember the passport number unless you have a copy of it. So if you have a scanned copy in your email ID, in your email inbox, you could at least just retrieve it and apply for a duplicate one. If there are property documents which relates to your house and they get washed away, you may have kept it in a bank locker, but the bank would also be subject to floods, right? So water could get into even those lockers and destroy those documents. You need to at least have scanned images saved online somewhere, so that you can at least retrieve them and recreate those documents. So creating and digitalizing your documents is a very important element of financial planning, I would say. because you don't want your investment records to be lost, you don't want your bank records to be lost. So if you can digitalize, of course, I mean, this is one of the resolutions that you should spare some time. It's more of a clerical job. It's not something that you really need to put your mind towards it, but it needs to be done. You need to dedicate time and actually do it.
Yeah, so one weekend would suffice getting it all sorted.
I think more than sufficient.
That is if you have all your papers in order in the first place. Okay, now to wrap it up, what's your resolution? You've advised all of us. What are you going to do in 2016?
Well, I'm going to just possibly make sure that all the people whom I'm advising are going to follow this, and in turn draw a very strict discipline for myself as well. And the points that we discussed, I'm going to re-go and just go to check mark that if I have complied to all of them myself.
All right, on that note, Harshvardhan, thanks very much for joining in. Thanks very much, Meghna. I hope this was helpful, and I hope it's going to be helpful in 2016. Happy New Year to both of you. And I hope, viewers, this is useful for you as well, not just in making more money in 2016, but at actually looking at money more holistically. Let's take a very quick break. We'll come back in a bit, and still ahead, we'll bring you the best advice on money this year so far. So all the tips and tricks that you might have missed are all lined up next. You'll actually want to watch this. So stay tuned to Money.